When are and what is the next batch of swing trades? And it's really the when that's more important here. The when is really all about tomorrow's FOMC meeting minutes. And sometimes timing is really what's going to dictate our trades in terms of which symbols pull back to the zones that are useful when the Fed minutes meet. The uncertainty is this. Expectations are for the Federal Reserve to cut rates this year, Q2 specifically. What was once an end of Q1 expectation, which is initially what got the bonds to begin leveling out, has now turned into May as a maybe and definitely June. So that pushes things out, and there's going to be the requisite higher yield reaction from bonds and a little bit of a stall, a little bit of sideways action, or the less higher highs and higher lows movement of January, goes into February with a little less swagger, right? So yeah, the equities, the NASDAQ and the S&P, they lost a little bit of their mojo, right? But does this mean the A, uptrend is over? And B, does this mean that we cannot buy the dip any longer? And I guess C, when would we buy the dip? All right, so let's talk about where we're going to buy the dip. When we're looking at an index sector stock approach, my futures traders, we know index sector stock, the two strongest indices are the S&P and the NASDAQ. And why are these the two strongest? Well, when we think about relative performance, and I'm going to show everybody a view of relative performance right now. We think about normalized performance. This is the COIFIN website, and we look quarter to date. What's happening right now? And I like this to be a little dark, so let's go to the dark. All right, there we go. So when we take a look at the U.S. sectors from a relative performance standpoint, quarter to date, SMH, XLC, those are two of the four of the heavily weighted sectors in the NASDAQ. Come down a couple notches, you got XLK. So three of the four heavily weighted indices in the NASDAQ are in the top. XLV and XLF disproportionately benefit the S&P, and they don't benefit, frankly, the NAS at all. So think of the NASDAQ as a motor, those sectors are the cylinders, and as long as those cylinders are firing, those motors are doing fine. Now, if we go a little further down the list, you can see further down is XLI and XLE. That helps the Dow, but the Dow is not as strong as the NASDAQ or the S&P because those two cylinders, while firing okay, are firing weaker, if you will, right? They're further down the list of relative performance. The stuff at the top, really strong, down towards the bottom, less strong. And as long as we're above the zero line, meaning this is pretty much the cutoff where ITB is at the very bottom. By the way, is anyone thinking about ITB unless, which is very mortgage rate sensitive, unless expectations are for the Federal Reserve to cut? Why would the ITB be up there? Why would the ITB be in a pretty strong trend if we aren't expecting rate cuts? So remember, we collectively as investors and traders start to think out ahead in terms of what happens, what benefits when rates are lower. All right, so we talked about what at the index and sector level. And I'll continue to talk about my favorite stocks in these groups, whether that's American Express, whether that's GE, even Meta to a certain degree. I like Meta quite a bit. I will say this, if I am looking at this week and where my focus is, and I put this in the top tier outlook, so my Sector Secrets Mastery folks, if you're looking at this, my futures traders, already, if you understand how to use stocks to gauge expectation about opportunities, we also know to gauge expectation about volatility. If NVDA is coming out, that's one of the Magnificent Seven. It's the last of the seven to report. This is going to have a huge impact on the NASDAQ. This is going to have a huge impact on the semiconductors and XLK. So I would just assume for this week, just for the next 4 days, circumnavigate tech. All right, it'll be here next week. Let's get through whatever's going to happen with NVIDIA because there are other sectors, healthcare, financials. So let's go to healthcare, financials, the S&P, which will be affected somewhat by NVIDIA. We have XLI, which is where GE resides. In terms of strength, XLP, got to love the XLP sector itself. Keep an eye on some of the outperformers. Walmart knocked it out of the park, obviously. But we do want to continue to think about buys in things like Walmart, Costco, Procter & Gamble. All right, so let's tie it back to index sector stock. Focus on the S&P and the NASDAQ. Circumnavigate the NASDAQ this week and maybe XLK and SMH, meaning those two sectors at the NVDA stock impact will be felt the greatest. Financials are still all sorts of strong and awesome, which means the S&P and the Dow could be interesting this week. Right? So how can we avoid the volatility? I don't always want to run straight into the volatility, right? Sometimes it's better off to just sort of wait in the periphery until everything happens rather than being in a mosh pit, right? Okay, so the next thing is the timing. Timing is tomorrow after 2 o'clock. And timing comes down to taking a look at the economic calendar over at, say, Forex Factory, understanding where these hot zones are waiting. 2 p.m. Eastern, Wall Street time, right? That is East Coast time. FOMC meeting minutes. This is a look at the discussion that led to the statement and the decision that the FOMC made at the last meeting. So it's a backwards looking approach, but it gives us a little bit more detail than the press conference and the FOMC statement. All right. Now, this is where we want to hear that the Federal Reserve is getting ready to cut. We don't need them to do it in March. Heck, we seem to be okay with them waiting till May. We're still at and near highs in the indices, but we definitely need to see that it is something that is sooner rather than later, sooner meaning June. And then the rest of the week is a little bit of PMI number here and there, but the FOMC event tomorrow at 2 is the big timing. So this is how we lay out the entries. Either in the aftermath, and I would say between 235 or even 230 to about 320 is where I want to see the pullbacks. Then we want to see support. We have to see support. In other words, I don't want to see weakness and a heavy close if I'm gonna buy into Wednesday's weakness. Or wait till Thursday. That's the timing. That's the list of symbols we're looking at. That's the list of sectors we're looking at. If you crack open the XLF, let's do that here real quick before I wrap up the video. And in the premium video, I'll get into a lot more detail about this, as well as a burning question. Are rate cuts bearish? We're going to talk about that in a lot more in the premium video. And take a look at XLF. What are the strong names here? American Express and JP Morgan continue to be the best looking strength names here. But frankly, most of the XLF names can be bought. This leads to also buy the dip in the NASDAQ. In the S&P. In the S&P. We want to buy dips in the S&P, preferably, again, in the timing that I just stated. Hope this helps. This is the kind of stuff we're doing in the Sector Secrets Mastery Trial. These are the conversations that we had in Simpler Central today. And join me for Charts and Coffee tomorrow morning at 9 a.m. at the Simpler Trading YouTube channel or my YouTube channel at Raghee Horner. I'll see you all in the next update. If you have any questions, leave them below. And thanks as always for smashing that like button. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.